Taiwanese index, however, is down 1.4%.
The 50 bips hike is more or less discounted.
Post policy, perhaps if the market protects the lows, the bank nifty could actually give you a very good risk reward trade on the long side.
We all know that monetary policy has a lag. You should look at the data because it tells you where you are, but it doesn't tell you where you're going.
Meeting was, of course, was regarding the Zee-Sony merger, the impending Zee-Sony merger. So until there is some clarity on this, some conclusive development, there could be a bit of an overhang on the stock.
It's starting a bit lower, down just about 9 points.
We are in super tough times.
Increase the policy repo rate by 50 basis points to 5.9%.
One is, of course, on the repo rate front, which is on expected line. Two, I think the overall statement guidance is fairly balanced.
We are starting this hour with the market at absolute high point of the day.
With respect to disclosure norms regarding new age IPOs. Now, there could be an introduction of something that will be called an initial public offering.
The first point, which favors the argument that 5G may lead to another round of consolidation in market share gains for Bharti as well as Reliance Jio and market share loss for Vodafone Idea.
Markets at the day's high.
Good afternoon and welcome to Closing Bell. I am Anuj, with me Nigel. The Bulls have endured a painful week, but they're ending the week with some revenge, some vengeance. And this is something we spoke about in the morning as well, that the risk reward perhaps might play out on the positive side, especially on the bank nifty, purely because of the amount of shorts that you had in the system. When we started trade today, we had record shorts, $1.5 billion of shorts, and the bank nifty has led with 3% rally, powerful rally. The policy was a non-event, but the event itself is out of the way. So that's something perhaps the market was waiting for. The risk on is visible well and truly in the market. Look at the metals, the way they are rallying. But the point I've been making for the last 3 or 4 days, this is a market about an algo trade which is playing out in the market, which is on the dollar rupee. If the dollar rupee strengthens or stabilizes, you will see a big rally in the financials. Because for the last few days you've seen a one-way fall in the rupee, you've seen that translate into one-way decline in the bank nifty as well. With today's rally and the dollar index also retreating, that's fired some of these algo trades and powerful rally in the bank nifty is what we have. Let's see what the last hour brings for us. My sense is maybe some more short covering could be left. Maybe even 17,200 for the day is possible. Nigel, how would
Well, good afternoon. It's sweet revenge, right, for the Bulls. After the kind of selling that we've seen on a day-to-day basis, you're getting used to seeing a lot of red out there. And as you said, the rupee, it was a perfect day for it to pull back. The CAD number was better than expected. You had the dollar index as well that corrected from around the 114 to sub that 112 odd mark. So the ingredients were in place, and good to see some bit of a pullback on the rupee itself. Final 60 minutes. Can the Bulls drive home the advantage? That's going to be the big question. Can we end closer to around that 17,200 plus mark? Well, the Bulls will feel that they've had a very, very good trading session if that did happen. First up, though, let's run you through what we have lined up on the show for you. Stocks pick up on the back of an eventful Friday with the RBI raising repo rates by around 50 basis points. The key indices trade with gains of more than 2%. Financials lead the charge. Metal stocks surge in trade. Whole host of events are lined up tomorrow. September auto sales, all-awaited launch of 5G services, and a detailed eye on gas price review. More details coming up in just a bit. And Mr. N. Jay Kumar of Prime Securities will be joining in to take this discussion forward on markets as well as stocks that he likes. All this and more in the next 1 hour on Closing Bell.
Okay, but first up, as always, we have Mitesh Thakkar joining us for some closing strategies. Mitesh, hi, good afternoon. Powerful rally. In fact, just one way on the Nifty and the Bank Nifty up 3%. Your thoughts on index and your stock calls?
Very powerful, Anuj. In fact, we were looking at 16,750 as one of the key support areas, and I was expecting a bounce back to about 17,200 to 50. What I was not expecting, it will happen intraday basis. I think this is much stronger than what I would have thought. But I think, again, around these levels, there's a gap. There's also a couple of moving averages. So maybe 17,250 would be a difficult level for the markets to get past. You might want to lighten up on longs and see how it goes from here. If there's no supply pressure and if we continue to inch up, start getting past 17,290, 300, then I think maybe trade on the long side as well. But for the time being, I think take profits on some longs if you've taken in the day. Reliance is something which has given a very strong price volume action and a big reversal from here. There is a intraday average at levels of around 2,400 and the highs around 2,402. So if it gets past 24.05, I think buy this one. Keep a stop at about 23.80 and a target of around 24.60 on the upside can be looked at. The other one is Sun Pharma. That's also showing continuation pattern. So that's a buy. Keep a stop below 9.30 here. Look for targets of 9.75.
Okay, all right, Mitesh, thanks a lot for that. Well, let's get in our market expert, Prakash Diwan joins in. Hi, Prakash. Good to speak to you this afternoon. Well, the bulls will feel good, right? We spoke earlier this week, and at that time it was a lot of gloom and doom and a lot of red on the screen. But plenty of stocks have popped up, and the biggest gain on the Nifty today is Hindalco. The fear is there's going to be a recession. If it's going to be, not a very hard landing, then maybe, in fact, given that it's a converter business, the stock could relatively outperform. Are you in that camp? For the time being, the stock is up 6%.
Yeah, Nigel. Good afternoon. So I do agree, and there's this brokerage report as well, which talks about the kind of, salience that's built in and at current market levels, probably, the basic price of aluminium itself has been discounted to weekly. So, there is that headroom to correct itself. But, on the market itself, it's so simple to justify this move because of the short covering. But I think what's critical is that we seem to be listening into the RBI commentary and the RBI governor's, comments on how strong or resilient we probably have been and will continue to be. And some of the projections that he made on the GDP and all do tell you that decoupling theory probably is working very well in favor of the Indian markets. While we have kind of, been behaving very in a very stellar, favorable way as compared to global markets. And the question was whether this could continue or this is sustainable. But this seems like the short covering, of course, is what you could attribute this move to. But it does seem the market could probably, give you volatility tremendously in the next 30 days and as a result season comes through. But it will probably also give you opportunities to buy in for the medium to long term in certain pockets for sure.
Okay, fair enough. Well, it's Friday today, so the week ends, but the news doesn't, right? Big news lined up over the next, 48 hours or so. So let's actually, take it to our research team because, we're watching out for a few events. We have our whole team joining us. In fact, let's have all of them in window. We have Sonia, of course, who's joining us. Rima is joining us as well. And Sonal will be with us as well. So let's... can we have the window with all of them? Okay. Of course, Sonia will be tracking the auto sales. Sonia, why don't we start with you? What are the expectations?
So, for the auto sales this time around, things are going to look quite good because of the festive season that has come earlier than what we saw last year. So, on a year-on-year basis, it will look good, and particularly for the passenger vehicles as well as the commercial vehicle sector. Four-wheeler demand, as we know, has come back in a big way, especially for players like Mahindra and Mahindra, even Maruti on account of a couple of their new launches. Even in the commercial vehicle space, truck demand has improved quite a bit, especially medium and heavy commercial vehicles. And the only pocket that has not done that well is two-wheelers because of exports. Export markets like Nigeria and Egypt have had some pain, and that's reflected in names like Bajaj Auto as well as TVS Motor. Quickly to run you through the numbers, Maruti, as I said, expected to more than double this time on a year-on-year basis. These are Nomura's estimates. M&M will be the best of the lot. The auto sales are expected to go up 126% year-on-year. Ashok Leyland sales up 63% year-on-year at 15,500. Tata Motors sales expected to go up by 40% year-on-year. In the two-wheeler space, the best of the lot will be Royal Enfield. Eicher Motors has done very well in the Royal Enfield, segment and over there because of the new launch as well. The sales are expected to go up 130% year-on-year. Hero MotoCorp will be the worst of the lot, down about 5.7%, and Bajaj Auto will see a single-digit growth because of the problems that they're facing in pockets like Nigeria and Egypt. But overall, good set of numbers expected this time. Back to you.
Okay, all right. Thanks a lot for that, Sonia. Well, Prime Minister Narendra Modi will launch the 5G services in India tomorrow. Even as we welcome 5G in India, the question we're asking is, will 5G trigger, another leg of consolidation in the Indian telecom sector? Rima standing by at the big wall to tell us exactly that. Rima.
Thanks so much for that. So the first point, which favors the argument that 5G may lead to another round of consolidation, which means market share gains for Bharti Airtel and Reliance Jio and a loss in revenue market share for Vodafone Idea. The reason is that Vodafone Idea is the only telecom operator which has so far not revealed its 5G plans. Reliance Jio at the AGM said that it will roll out 5G services in 4 key cities by Diwali, and it's aiming to have a pan-India presence by December 2023. Bharti Airtel in its Q1 conference call said that they're aiming for a complete 5G coverage by March 2024, which basically means that Bharti as well as Reliance Jio will have 5G services across India in the next 18 months. But there has been radio silence from Vodafone Idea's end. And one would imagine, right, that there would be temptation for a Vodafone Idea customer to port to peers if they were offering you 5G, but there is no visibility of getting 5G from Vodafone Idea. So the question is, why is Vodafone Idea not talking about 5G? Well, one of the possible reasons could be the long pending conversion of the AGR dues into government stake or equity. This has been pending since January of this year, and only once we have clarity on the government stake conversion will the company be able to raise external funding, which gives Vodafone Idea money to fund its rollout plans. Now, what's at risk of a delayed Vodafone Idea 5G launch? Well, the risk is there is a flight of their 4G customers who may wish to move to competitors to get the benefits of 5G's faster speed and lower latency. Now, Vodafone Idea approximately has 20 million postpaid subscribers and 119 million 4G data subscribers. And Vodafone Idea stands the risk of losing some of these very premium subscribers, which again will drive the point that there could be market share loss further for Vodafone Idea. In fact, Vodafone Idea has been consistently losing market share. In FY18, its market share was close to 38%. Now, this has dwindled down to 18% as of FY22. And look at the way the combined market share of Airtel and Reliance Jio has gone up. The duo now commands a market share of 75%. So with Vodafone Idea's already lower capex spend versus peers and its possible inability or a delayed launch for 5G, the worry is that market share loss may continue for Vodafone Idea, which will drive that other leg of consolidation. But as I wrap this up, I quickly want to highlight what is needed to drive 5G adoption in India. One is smartphone availability and pricing. Bharti Airtel at the JP Morgan India Investor Summit said that India only has 9% of its existing phones and 30% phone shipments which support 5G. These two numbers need to improve. And secondly, the price of 5G smartphone is also fairly prohibitive. Now, according to IDC, the price of a 5G phone is approximately $350 million, much higher than the price of the average phone which is sold in India, which is $200 to $220. So the affordability of 5G handset is directly linked to the 5G adoption, and in that context, all eyes will be on the Reliance Jio 5G smartphone when it comes and what the pricing in. The second important thing to track will be the 5G pricing. Well, the industry pricing is already on an upswing. We've seen 2 rounds of 20% hike over the last 3 years, but the ARPUs today, despite that, are still lower than what they were in FY16 before the Reliance Jio launch. Can the faster speed of 5G drive a faster rise in ARPUs? That is something that we will be tracking very closely. Back to you.
Okay, Reema, thanks a lot for that. So that's something to track as well. The big move which is happening right now is the gas stocks, and the market seems to believe that the prices will be hiked tomorrow. Of course, the panel, Kirit Parikh panel, has asked for more time. But the stocks behavior today in a very strong market is telling you something. Let's go close to Sonal for that. Sonal?
Oh, yes, they are, because the expectation is that if they go by the formula this time around, from 1st October, for 6 months, the prices could be hiked by as much as 100%. This is because of the way the global gas prices moved around in the last 6 months. So that would mean from current $6.1 per MMBTU, which is the current domestic gas prices, it could be doubled from 1st October. So, of course, the usual suspects, the IGL, MGL, Gujarat Gas, these 3 stocks will see some impact because of higher raw material prices. ONGC, Oil India, these companies tend to benefit, but fertilizer companies which use gas as a raw material could be impacted because of that. In normal times, it could have been the vanilla formula that was applied on domestic gas pricing, but the times we are in, where global gas prices have surged multiple times, this time around, the government set up a panel to review gas prices formula. This was done in order to suggest a fair pricing for the consumers so that it doesn't go beyond a certain level. Gas prices have been surging globally, as I mentioned. Panel was given time till September end to come up with a revised plan to suggest the gas prices this time around. However, panel officials told CNBC-TV18 last week that they have not been able to do justice to the issue of gas pricing, and if formula is changed, they will have to be notified and they will have to be done it so via cabinet approval as well. So there is no clarity whether formula will change from October 1st or not. So for now, the expectation is that yes, that the gas prices will be hiked by 100%. So that remains to be seen, and maybe in anticipation of that, this big move in stock prices is what we are seeing.
Sonal, thanks a lot for that. In fact, thanks to all of you, Sonia, Sonal and Reema, for taking us through all that's lined up over the next 48 hours. Prakash, the big one to track, of course, is from the market point of view, is this what's happening in the gas prices. Your thoughts and how to approach all these names now?
Good afternoon, Anuj. So I think it's a little bit of an overdone thing. The situation has got precipitated because of the delta of 100% hike, given the formula's dependence on an aggregation of global price trends. And you know, my sense is that the Kirit Parekh panel in the past, committee in the past as well, has been very judicious, and it has always chosen to err on the side of caution. I mean, they've never done anything which has been very, very debilitating for the sector or for the consumer. So it's been a very balanced view. I would believe there will be some balance, equilibrium based thing that will prevail, and you won't see this steep hike, which I don't think the economy or the consumers are in a condition to absorb at this point in time. It'll probably be much more lesser than the impact will be much more lesser, and hence these stocks could recover. You know, and look at how things are. I mean, 5%, 4% for a company, a single day dent usually is something which is not something which could sustain. I would expect some sort of a reversal once the news is out and some sort of a formula is arrived at.
Okay, all right. Prakash, what about the telecom pack that Reema just discussed? How do you approach that? Vodafone idea, there seemed to be some hopes when the stock went, I think the 11-12 rupee odd mark. Would you take a punt out there, or do you believe you'll stick to the core telecom major, either Bharti or you go in with the Reliance? Your take.
Nigel, in fact, with every passing day, I get worried about Vodafone's ability to, continue participating as a respectable third player in this space. I mean, 5G is so capital intensive; it is so competitive in terms of your service standards that it's easier said than done. You just don't need money; you need the wherewithal to continue investing continuously and to sustain that high capex, because the technology transfer into user experiences is also quite painful. So it's not so easy. I have no idea how Vodafone Idea can actually compete in that space. In fact, I'm more worried for the customers as well. So if people haven't used MNP to move to one of the other players, it's probably time to do so. And from a stock perspective, there's been so much of volatility, and it's a hope trade which I keep on saying is getting stretched. So people need to be a bit cautious about that. The big one here, while it looks like Bharti is also equipped to do it because they've given a timeline which is fairly aggressive of I think early 2024 when they want to cover everything. It'll be interesting to see from Jio's perspective how well the handset launch is accepted in the market, because that adaptation is going to be the key in this case. So, and then I would believe end of 2024 or maybe early 2025, you'll probably have the ARPUs moving to that 300, 320 zones very easily on an aggregate basis. So that's going to be the big change. You could start penciling and working backwards. All telecom stocks will probably get re-rated once 5G is out there and it started getting used and people start getting billed for it.
Prakash, stay on. We have a couple of more questions for you. For now, we'll take a break with the news that the market has given up just some gains from the highest point of the day, but not a lot. The Bank Nifty is still holding firm with near 3% gain. We'll be back with N. Jayakumar of Prime Securities, and we'll ask him what he has made of the policy, how he's seeing the current move in the Indian market, whether we can have the decoupling continue. All of that lined up after the break.
Well, skimming off some gains from the day's highs, what we've seen on the Nifty itself. So we are down close to around 50 points in the day stop. Coal India has pulled back a little bit. Dr. Reddy's as well has taken a bit of a leg down. And Apollo Hospitals as well has pulled back a wee bit in the last few minutes or so. Still holding, but though with gains of close to around 300 points. Well, Prakash Diwan's still with us. Prakash, one stock that's moved very, very well both yesterday and today is India Cements. The stock went to around 295, then it crashed to around 225, but from there it's given you a bit of a bounce. What's your take? Buy into these cement companies. The reason I ask you is when they're $50, $60, $70 per ton, you can buy it. But when it moves to around $100 per ton, then it gets a little bit tricky. How would you approach these stocks and India Cement in particular?
So I think it's very evidently the consolidation moves that are anticipated, and people have started probably narrowing down on some names. This is one of those. I mean, I keep on hearing about India Cement being one of the candidates that could be looked at. But, just because of the kind of structure that the shareholding pattern that it supports or whatever. But I keep on saying, inorganic growth is secondary. It is going to be organic growth that most companies are going to be looking at. And the big question is, Nigel, all the huge capacities that are going to start turning out from somewhere in the middle of next year, calendar 23. The consolidation will be subject to those gaps being filled, wherever there are gaps existing from a geographical distribution perspective. So it's too early to bet on that. I think you could stick to the names that we've been talking about, whether it's an Ambuja on a transformational journey or a Dalmia Bharat for the efficiency premium that you pay, or for that matter, even an Ultratech for the kind of scale that they sit on. So you can take a choice, but I would bet on this consolidation thing and risk my money at these valuations for some of these names that keep on floating around.
Okay. Thanks, Prakash, for joining us. Have a good evening and a good weekend, of course, as well. And Jay Kumar is joining us, Managing Director at Prime Securities. Jake, sir, good afternoon. Thanks for joining us. 50 basis point rate hike. The RBI is saying that they need to contain inflation still, and the market's up. The Bank Nifty is up 3%. Of course, we had seen a big decline as well in the last few days. But you tell us, what's your view on the market right now? Are you bullish?
I'm extremely bullish. That sets the tone for our discussions. I think these large, painful drops are exactly the right points at which people should be deploying more money. This isn't a 6 month, 1 year kind of time frame. I want to go back to the time when, over the last 3-4 decades, when every single US or European company made investments in China. They did this with a lot of the typical, band baja barat kind of thing. Whereas the investments in India are being made very, very quietly, because this is supposed to be this China plus one. People are moving facilities out of Taiwan. People are moving facilities, or new capacities are coming up here. I personally believe this is our moment in the sun. Corrections will keep happening in the market. Every time there is a strident noise for decoupling, the markets get overbought, they will correct, no question. But I think it's important to see, like we see stocks, which market in the world is resilient. And I think that's very, very clear. The jury is not even needing to meet on that. That the Indian markets are showing strength, which clearly indicates both domestic participation and at the margin, people, when money goes out, it also comes back into the Indian market. So I'm very, very bullish. I think this is a new, hopefully next couple of decades will be for the manufacturing theme in India as we regain some of our percentage. And, with the rupee at 82, I think exports are going to become, extremely attractive in a number of areas. The problem right now, of course, is there's international recessionary fears that continue. And to that extent, you may not have immediate sort of, moves on the export front that you can see. But clearly, as whether it's a Foxconn coming together with Vedanta or Apple starting its manufacturing here, I think you're going to have more and more incremental news coming through of this kind. And India, for the first time, I think will be a preferred destination. Forget China plus one. And that's the reason I'm extremely bullish.
All right. Hi, Jakes. Good to speak to you after a while. You've been positive on this private capex recovery cycle, the manufacturing theme, as you just mentioned as well. Could you tell us in terms of stocks, how would you approach this space? You've been positive. It appears we've got a long runway ahead as well. So you're buying it for a longer duration. A lot of retail audience out there would like to know a couple of names, if you could share.
I don't know about names, but I can talk about sectors certainly. I think engineering exports is going to be a big theme. A number of MNCs in this space are actually operating at 51% or some even lower than that. Those are the kind of plays we should take. These are, for instance, there's an MNC which is a Japanese MNC in the engineering space, in the hydraulic space, that's quite active in terms of moving investments out of Taiwan into India. This is a company that's been talked about, it's been covered, it's been, it's been in the news. I don't want to mention specific names, but themes on the engineering export front, that's one. Number two, this big defense play that's going on, hydraulics and other kind of allied spaces feed into, whether it's steel or it's hydraulics or it's defense, they feed into this. So there are tailwinds both from a domestic engineering perspective as well as exports. The third, which I would talk about, is especially integrated, deleveraged metal players and metal converters or value-added folks on both on the metals, whether it's you take aluminum, steel, etc. Some of them actually not put up incremental capacities and deleverage themselves pretty aggressively in this cycle. I think those players, especially when you expand capacity through internal accruals, don't take on new debt, and you're able to be reasonably integrated, both in terms of procurement of raw materials and the some integration on the downstream side. I think you could have, even today, some of the metal players, the steel space, are producing EBITDAs that no cement company will be able to produce even in the next 3 years. So the way I see this is that for too long have these been a function of, and been branded as cyclical plays. I think some of them will become structural plays. As you see, some of these stocks have actually settled at higher levels in any case compared to the lows that they have seen. They're off their highs, but I think some of them could surprise us in the coming few quarters, especially with,
Yeah, got it. No, Jakes, you very rarely talk stocks. I remember our conversation a couple of years back, and in terms of banking, you had, I think you had put your money on SBI, ICICI, BOB, and Axis. Except Axis, everything else has surged. Axis, of course, has been an aberration, which a lot of people are surprised as well. But do you think this pocket of these four banks would continue to sort of lead this pack?
One correction, I think even I never put money in Axis. That's not one of the, in fact, so I leave Axis out of this. But the other three stocks, I think I've never been more bullish on banking than I have been over the last 2 years. Banking has been a leader of this rally, and I think it will continue to do so, including and especially some of the names that you mentioned.
But what's driving this re-rating, for example, in an SBI, Jakes?
Two things. One is that many of these have been suffering from inordinate holding company discounts. So some of the subs are doing extremely well. Number two, you have a situation where the entire write-offs, which has been the albatross around the necks of these banks, has completely gone off on the corporate side. I do want to hastily, though, add that if there is a risk that is building up in the system, in the economy, it is this retail credit, which otherwise is called by various fancy names like BNPL, etc. Some of this has been, of course, propagated by the fintechs, really, not so much by banks in general. But I think if there is a pocket of worry, it is the aggressive buildup of the book by some of the fintechs and NBFCs on the unsecured retail side, which offers some degree of risk as far as I see it. But other than that, with banks of the kind you mentioned, whether SBI, ICICI, BOB, etc., I think most of them have got provisions in the 85 to 90% range as far as PCR is concerned. Their write-off cycle is pretty much over. One or two write-offs they should have because that's normal banking. And I see a sharp decline in both gross and net NPAs coming off. And the fact that their subsidiaries are doing so well will be another area of re-rating. I think these are good. So let me just look at the performance of some of these stocks. Despite the sharp correction, they've come off 5-6% from the top. That's it. So I think they offer a tremendous scope for people to dig into. These are not, going to be multi-baggers in 2 years kind of play. Over a 3-4 year, if these can double, I think these are good returns to take.
I was just going through that cue that you gave us about Japanese promoter hydraulic. I don't know, few names are propped up. I think UCAN is one of them. But as you said, you're not naming stocks. So we'll stick to that. Banks is what you're positive on. What about the IT space, Jakes? Any view out there? They were the big wealth creators earlier. And this year, big underperformers. The jury's still out there, which way they're going to swing. What's your take on that?
So the one thing that I see in the IT space is there'll be large cash generators. But more recently, I think the problem has been they've also been overowned. So anytime the foreigner wanted to sell some stocks, the IT and the financial services space came in for hammer. The good news, and the way I kind of see sectors or stocks is, in a difficult time, what are the sectors that hold out? So we see banking and financial services have actually held out pretty well, even during the correction. And on one single day, the bounce back can be pretty sharp. So the way I see this is that banking and financial services will continue to do well. The IT, both in terms of international headwinds, as well as in terms of the mass disruption of businesses across the world, I think there is going to be a problem. I don't believe IT may be an outperformer, though it will generate adequate amounts of cash, but maybe the multiples will start coming off or normalizing.
How much more for the multiples though, Jakes? That is the big question, right? Because, margins are back to pre-COVID levels. In fact, there's a belief that perhaps they'll go lower than pre-COVID levels, but valuations are still 30 to 40% higher than those. And of course, that happened for a reason, because of the free money and the visibility that we had in the sector post-COVID. But I was just looking at sectors where, they are trading at comprehensive premium compared to the 10-year averages. Banking is still at a discount, while IT is still at a reasonable premium. So do you think more needs to happen in terms of a reset?
I think more will happen, because I think the movement of money is towards, you cannot have every rally led by the same horses. And as they say, horses for courses. So I think you have to get into under-owned spaces. Of course, banking and financial services now reasonably owned on the private sector side, but not so much on the public sector side even today. People have used these trading rallies to walk into and walk out with trading profits, or taken their hits and come out, as the case might be. But I think people have not played the structural story. If some of these banks can demonstrate on the public sector side recoveries consistently for 2, 3, 4 quarters, consistent addition to book value, and consistent organic profits, there's no reason they should quote anything close to this, because most of them are still trading at 0.6 times book.
Okay, now the sector which was most under-owned 2 years back, but is now actually trading at the highest premium compared to its 10-year averages, is automobile.
Sure.
What next here?
I'm not this bullish on auto. I think it's been a huge catch-up as a result of, a variety of reasons, not the least of them being under-ownership. I think it's a hugely competitive space. And if you believe that retail credit could be a matter of some concern over a period of the next few quarters, and I certainly do believe, my sense is that anything bought on credit and auto is a big beneficiary of that. I don't believe this kind of premium is warranted, especially to historic levels. And there's significantly more competition. There's significantly more brands and more products in every category. So my sense is that this is a little bit of enthusiasm that could possibly cool off pretty soon. And what had happened was maybe some of the conglomerates in this space got re-rated, which is probably a good thing. Some of these conglomerates were seriously under-owned, and therefore the move up became that dramatic. But in general, I'm not bullish on this space.
All right. Jakes, the normally defensive pharma space has been on the offensive. And, later today, I'll be putting out a piece on that. That's the one that hasn't moved, I think, the last 7 years. 2015, you compare the pharma index today, it's absolutely pat, point blank, not moved too much, while the Nifty has doubled in the same duration. It appears now, margins could improve in the second half of the year. Maybe the worst of pricing erosion in the US could be behind us. How would you approach this space? Valuation-wise, well, there's not too much cushion there. It's par for the course, actually. Do you think some allocation over here is warranted?
So the way I see this is, one or two names in the space that I have tracked have not done well. Let me be honest. They are large players. I suspect, profitability concerns may have been overdone in recent times. On the other hand, I believe that a lot of the generic players are dependent on trends in the US. Now, if you eliminate that for a moment and say that barring that, the Indian business is reasonable, does not necessarily warrant this kind of multiple. I think the pharma space, the good thing about it is most companies have no debt on their books. and therefore these are pretty safe plays in that sense. Would it warrant a large amount of upgrade? I'm not so sure. I think the sector will do reasonably well because it's, as I said, not leveraged. But some of these people have actually started getting into the PLI schemes or into the local Indian domestic market. So there could be some upgrade in those. But otherwise, the top 2-3 names in this space are trading at reasonably good valuations, and therefore I wouldn't be a buyer of those.
Okay, then one last question, Jakes. Whenever I have a conversation with Ramdev about market, he says the only worry I have is how much lower can the market go, because upside will be huge. So from your point of view, do you get a sense that we may have made the low for the year, or can we break them? Even if the larger texture is on the upside and this is still a bull market, near term.
I view it differently. I think, by choice or by otherwise, I have been bullish and optimistic, and thankfully Indian markets haven't let me down. I do believe that we could make new highs, possibly this calendar, but certainly this fiscal. So from that perspective, can the market go down to 15,000? I don't think so. Can it go to 16.5, 16.7 and test that level again? Possibly, I'm not so sure. Please understand that the entire dancing to the tunes that we are doing currently is the movement in the yields, movement in currencies. And those have been extremely wild and violent in recent times. So when the sterling, for instance, goes down 35% over a 2-year period, or 30% over a two-year period, you do get worried. So keeping that aside, I think whether on the currency front or on the yield front or on domestic, whether it's power cost or most of the other things, we've been pretty much middle of the road folks. We've not had exceptional energy costs, and I touch wood when I say this, like it has happened in the US, in Europe, etc. So from that point of view, in a bad market, if you're holding our own, chances are that if things normalize, we will be the outperformers. Now, how much lower it can go, there are a whole bunch of black swan events that one hadn't predicted, like this turmoil in Europe, turmoil in yields, 4.5%, the 10-year, etc. These are, difficult things to predict. So I'm not out there to say that nothing terrible can happen, but I'd be very surprised if we break 16.5 to 16,700. So the lows we saw recently may well hold out. Maybe that the markets will come back to test them. I'm not so sure. I'm not a great chartist or anything of that sort, but I think I look at optimistically the fact that we could be making new highs. As I said, possibly this calendar, certainly this fiscal.
Okay. All right, Jakes. On that note, though, we'll thank you. You're clearly sounding way more bullish. And in fact, you believe maybe the bulls will be waltzing with the Nifty towards the new highs, 18,600 odd in this fiscal, rather moving with the bears.
That's almost 10% rally that Jakes is calling for, yes. And maybe even by December, certainly by March. And of course, the low that Jakes is talking about, Jakes is actually today's low. So, it's just that the first hour low today was somewhere around 16,700 only. But thanks a lot, Jakes. Good talking to you as always. Have a good weekend.
Thank you and all the very best.
Okay, we'll take a break. We'll come back with D Street Charter and of course BTST calls. The markets cooled off a little bit. I mean, maybe it's unfair to say given it was up so much. But even then, slightly off the highs is what we have right now. Larsen & Toubro and HDFC seeing some profit taking. I mean, again, these stocks are up quite a bit, almost 2%. It's just that from the highs, just a bit of a slip is what you're seeing. Well, Nimesh is joining us for D Street Chatter. Powerful rally. Nimesh, tell us, what are the dealers saying? Is this start of something big in terms of trend?
Well, Anujan, it's difficult to say whether it's a start of something new trend, but clearly this was anticipated as well. So today's pullback is not a big surprise for many dealers. There was an anticipation that maybe you'll see a bit of a short covering rally, and that's playing out in today's trade. In terms of flows, again, it's mixed, but there is a negative bias as well. So while you're seeing a powerful rally in a lot of the large cap names, the FI still seems to be on the sell side. Yes, there is a domestic buying flow, so maybe you'll see a less intensity of FI selling, but there is FI selling is what I understand from dealing room. So looks like it's more of a short covering rally, and the rally is clearly coming in from the financials, and that was the biggest index loser in the last series. The index was down 10%, and many financial stocks had actually come to a very crucial support level. So maybe from those levels you're seeing a bit of a bounce back in the financial names today. I guess a couple of big events to watch out. There are some which we highlighted as well, but beyond that, I guess at least in the first part of this series there was an anticipation of a pullback. So a range between 16,800 and 17,300 is what dealers are talking about. It's the first day. I don't think we should read too much into it. Let's see how it reacts on Monday morning. But for the time being, it looks like it's a short covering rally, and this can just continue up until 17,300, 17,400 on the Nifty, at least till the start of the next week.
All right, Nimesh, but good to see some green, right? Every day it's been quite somber and people have been quite disappointed. So some green, good to see. But what about individual stocks? What are you picking up?
So Nigel, in terms of individual names, the first stock is SRF. I'm picking this stock largely because yesterday we highlighted a big Morgan Stanley report. Today, intraday the stock was on 5%, and one of the reasons is there was a small block of 6 lakh shares, and I believe the promoter entity was a seller in today's block deal. Could be for various reasons, but because of that stock is under pressure today, largely on the back of a block where the promoters participated on the sell side. So that's the first one. The second stock is Bajaj Finance. Within the financial stocks, that stock has been a big outperformer today, up 4%, largely on good volume. So the FI flow seems to be back in Bajaj Finance. And remember, next week all the quarterly updates will start coming in, and the general anticipation is that Bajaj Finance will report strong quarterly earnings, and hence a bit of up move in that stock today. And the last stock is Granules India. That stock surprisingly is up 4% in today's trade, again on good volumes. No specific reasons. I spoke to a lot of dealers and all. No specific reason or a deal which is brewing in Granules. But do remember, the Granules buyback started 2 days back on September 27, and is going to continue until October 8. And the buyback is a fixed price buyback at 400 rupees. So maybe a bit of cushion now, the fact that the buyback has started, and hence a bit of move in Granules India as well in today's trade.
Okay, all right. Thanks a lot for that, Nimesh. By the way, the markets have come off close to under 120 points from the high point of the day. So it's that sort of a tricky market as we speak. The day's high was at around 17,187. And now we're closer to around the 17,060 odd mark. So just keep an eye out on that front. What slipped actually? L&T, that's a larger name that slipped from the high point of the day. ITCA, that's another large weightage out there. And HDFC, that was holding with a gain of close to around 3%. That's come off a little bit from the top. So these are the large weights on the index that have come off a little bit. And that's why the Nifty as well has slipped a little bit. Mitesh Thakkar is back with us. Mitesh, what do you make of today's market action, first on the Nifty and then on the stock specific side?
Yeah. So Nigel, I had actually been advocating going long around the 16,800, 750 zone. I think that bounce back has happened. But I still suspect that, this has this trend to get past 17,250, 300 zone. So I think around 17,200 levels, we'll again look for shorting opportunities. We already booked, part of index long position, but around that level, we might even explore buying into October or maybe even November series put options. So I think the overall structure is weak unless we start getting past 17,300. So closer to about 17,200, 250 is the idea where, you would want to again possibly sit on the short side of the trade. On the stock side, I think Nestle is something, which is breaking out nicely. So that's BTSC with the stop at about levels of 19,090 for targets of 19,300. And it's Friday, so UBL cannot be far from the list. That's a BTSC as well. People stop at 1695 for targets of 1730.
Okay, Mitesh, thanks a lot for that. UB, well, that of course is the one which always lights up the screen on Friday. But, Nigel, I tell you what, the Nifty may have cooled off, but the mid-cap index is at the highest point of the day. I just pull out the index intraday, the mid-cap index intraday, and, there's an important point here because the Nifty cooled off a little bit because of maybe the Friday factor. Just don't want to take any risk home. But in the broader market, and look at the advanced decline, that line, that graph is, the gap is only widening. So I mean, it all boils down to the global factor as well. The dollar, whether the dollar rupee, that really is the algo trade which plays out. I mean, if Monday morning we come and rupee for some reason goes back to 82, this rally will fizzle out. Yes. Absolutely no doubt about it. Today it looks good because of the way the trade has played out. But just keep at the back of your mind that this is a market in which there are still risks. It's not going to be just one way linear manner in which the market will move up. Hemang Jani is joining us, retail equity strategist at Motilal Oswal. Hemang, good afternoon. The stock of the last few months has been Bharti Airtel. I mean, it's like Rahul Dravid, right? I mean, without any noise, just keep making new highs. 5% higher today. What's your word on this one?
So good afternoon, Anuj. I think Bharti has remained quite resilient, as you rightly pointed out, and we've also seen that there is a fair bit of visibility in terms of the ARPU, and we are going to have a 5G rollout, starting from tomorrow, and Jio has indicated that they have aggressive plans to expand the footprint. So our take is that per se telecom in the current scenario where people are slightly worried about interest rates going up and how far this entire banking rally will continue if the interest rates move up. This is a sector which gives you far higher comfort in terms of the revenue visibility. Of course, the 5G rollout, the capex has been quite stupendous. Particularly Jio has put out a very aggressive target over there. But I think Bharti looks to be relatively well placed, and we do think that there is a case for some sort of a earning upgrade over the next few quarters, given that you will see a much higher ARPU expectation that people would have.
Okay, all right. Hi Hemang, what about some of these metal names? Hindalco is moving higher. Do you think at around 400 rupees odd, the stock is still looking good? I mean, just a couple of months ago, it was more than 600 rupees. Your take?
So, Nigel, because of the overnight, kind of spike that we have seen in the aluminium, maybe some stocks are showing some bounce back. But we have to reckon that in the current scenario where we are staring at a recession, be it US markets, Europe, we all know how the situation is. China has its own sort of issues. So in the current scenario, to make out a case for a significant rally in the metal names is I think not realistic. You may see some pullbacks basis certain price movement, but we would not be comfortable taking any aggressive allocations in the metal names in the current scenario.
Okay, all right. Hemang, stay with us for the time being. Let's get you some important opinion on the markets. We caught up with Helios Capital Samir Arora, who remains bullish on India, says India will outperform, but uncertainty will continue to impact in the near term. Let's hear out his views.
One big reason why the market has outperformed, because we were able to handle very massive selling by FIIs. And obviously when the FIIs come back, then it will be very difficult for them to not make a big price impact, because if the Indian mutual funds or retail or whoever or PMS, whoever has bought it at the time when those guys were selling, they are not going to give it back to them so easily. So that part is all agreed. I just feel that currently the uncertainty on many things now, which is US interest rates, which is UK trying to do suicide policies, or Russia, or heightened discussions on these things, or exploding of that pipeline. All these things mean that for the next 2-3 months, we should not be taking everything as an opportunity to invest the last dollar. These foreign investors who says that the valuation is high, is that our market is down this year or maybe flat this year. So it's not our fault that our valuations have gone up. It has not gone up because our earnings fell and therefore the valuation became high. It has become high because these other countries did badly. And they did badly for a reason which you can see. It's not that they have randomly fallen while you were running a marathon and somebody got left behind, but somebody broke his bone or somebody had a serious crisis. What can we do about him losing the race? We are surprised that our market is not flat or it is not green. I mean, that would be unreasonable. Even if it turns out to be, then it won't last. For example, yesterday morning was the easiest money that we made in recent days in the morning when the market is up 1%, when everybody knows that the UK has not reversed to help the market. It has reversed to avoid an utter crisis. And to take that as normal, and therefore now this means that central banks will give up and they will support the Dow, and all these stories that we are hearing makes no sense. We are in super tough times.
Super tough times is what we're in for. We'll take a break and we'll come back on the other side and wrap up the market action for the day and the week.
Welcome back. Well, that dip has got bought into. In fact, we're moving higher as we speak yet again. So good to see. It looks like the close will definitely be above that 17,100 because of the last 30-minute averaging. Well, Hemang Jani is still with us. Hemang, one of the big movers in the last 30 minutes has been Tata Consumer. Any view on the stock? Good move is what we're seeing out there.
So Nigel, this quarterly numbers have been good, and as per the general ground check, the prices actually have been relatively soft, and that would help them in terms of margin. And we've seen how the entire consumer pack has really done so well, and on the back of that, I think there might be some traction that we are seeing in Tata Consumer. We have a positive view on the name, and we still think that there is a case for about 10 to 12% kind of an upside in terms of the stock that we have under coverage.
Okay, well, Tata Consumer. On the, on some of these other stocks, Power Grid, any view here? There was, of course, a lot of doubts about what was happening with that REC stake. There's been a clarification. It's a stock which was doing well up until this event happened, but any views here?
So Anuj, typically, these utility companies, they really don't give you a big appreciation per se. Plus, you have this kind of an overhang in terms of government trying to do something adventurous. We are definitely avoiding, some of these names, be it Power Grid or NTPC, because, at the end of the day, people are coming into, for a bigger growth stories or wealth creation. So yes, from a dividend yield perspective, maybe some of these names can be good candidates. So yes, only from that perspective, this is looking okay.
All right, Hemang, we'll let it go on that note. Thanks a lot for joining us. Have a good weekend. Mitesh, thanks to you as well, and enjoy your weekend. We'll talk to you next week. For now, let's start wrapping up the market action for the day. Powerful move. The Bank Nifty up 3%, the Nifty up 1.7%, the Mid-Cap Index up 1.6%. Big gains led by the banking names, so HDFC Twins, Kotak, Bajaj Finance. By banking, I mean financials actually. Axis, all these stocks doing well in trade. What else? Hindalco was your top gainer, up 5.5%. That's the risk on trade which played out. Bharti Airtel has made a fresh all-time high. Doesn't get noticed this one. It's just that today, because it was such a strong mover, but otherwise it's been one of the rank outperformers. It's been a consistent sort of performer all through the last couple of years. What else? ITC, Titan, these were a couple of other stocks which did well. State Bank of India as well, Tata Motors, all these names higher in trade. HDFC Life, Divi's, Tech Mahindra, TCS were also higher. On the way down, you had Asian Paints, which was down about 1.5%. Adani Enterprise is following the trend that once you enter the Nifty, you give up your outperformance, and that stock was down close to 1%. Dr. Reddy's was down 1% as well. Broader market, Nigel?
Well, brilliant looking screen actually in terms of the broader market. Let's start off with the Adani Group stocks itself. Adani Green up close to around 12% in trade today. Anand Raj was the other stock that was up close to around 16% in today's trading session. RPG Life, well, that stock was flying away. India Cements, the street believes there is something on the cards. Our sister channel, Avaz, they in fact reported that maybe one of their plants could be on the block. So that stock as well was locked actually in upper circuit. Olympic did pretty well. Stock was up close to around 8% in trade today. And LG Balkrishna, well, that's the auto ancillary name. Today, massive volumes out there. The stock was up close to around 7.5%. Liberty Shoes as well was another stock that did pretty well. And Campus Active Footwear, well, that one as well, particularly in the last hour of trade, that stock went flying away. There were a few losers, though, particularly, let's highlight some of them from the F&O basket. First, IGL, MGL Gas, a bit of a grey area whether or not that gas price increase is going to come about or not. We are expected to see a big move, I think, on Monday, if in case what the street expects doesn't come about. But for today's trading session, a solid trading session. The RBI event was a non-event, actually. The RBI governor said pretty much what the market wanted to hear, and the Nifty Bank went flying away. 1,000-point gain out there. The mid-cap index up close to around 1.5%. More than 2,000 stocks advancing. A beautiful-looking screen to wind down the week. Well, we'll wrap up on this edition of Closing Bell, but you don't go anywhere. Our Friday special, Smart Money, comes up next.